I'd say the number one thing that is on our radar and that we write the most about is the ongoing train wreck of the energy crisis that started in Europe and has sort of snapped through our delicate just-in-time supply chains like a whip and found its way over to China, which through a lot of economic mismanagement has become the manufacturing center of the world. And China's response to the energy crisis that started in Europe is creating even more supply chain issues. We think that energy crisis is going to feed into substantial price shocks in the food space. We've been writing about this for several months. The world is just sort of catching up to it now. You're scrolling through a piece that we put out recently called "There's Not Enough Oil."
Right.
Part of the genesis of the energy crisis that we are experiencing today is due to the fact that the environmental movement and global warming anti-fossil fuel movement has successfully created a scenario where funding for development and exploration has been choked off in these sectors. And one of our overarching themes is energy is life. And if you choke off energy supply, you're really deciding who lives and dies, because the price elasticity for demand of energy is really just the price elasticity of demand for life and who can afford to pay it. And so
absolutely. Energy is in everything. That cost is embedded in every product and service. It hits the poor and the lower end, the lower middle of the economic spectrum the hardest. Just in the driving element alone is interesting. You know, you look at these rich areas around the US and probably around the world, I guess, but around the US, it's very obvious. You look at a place like Aspen, Colorado, beautiful place, been there many times. I have friends that live there. And, you know, all of the people that serve the wealthy in Aspen are commuting from what's called Down Valley. You know, the housekeepers, the gardeners, the handymen, the everything. When I used to live in Newport Beach, California, Southern California, all of the people serving us rich people in Newport Beach were coming from what's called the Inland Empire. And when the price of gas goes up, they are affected. You know, your gardener who has to drive an hour to get to his customer base because that's where the money is, right? Go where the money is, that's what they do. That is a huge impact on them. It's so unfair the way they are literally depriving these people of life. As you say, energy is life. It's absolutely true.
And it's going to get a lot worse, I think. So the charts we're looking at on the piece that you've pulled up, you know, the top chart is the U.S. crude oil production, which looks like it's on the way to potentially recovering to pre-COVID levels, but it's still substantially behind. But that's actually a bit of a mirage, because the next chart down shows you that because of this funding for, you know, the anti-fossil fuel movement has led to a choking off of funds, and all of these Wall Street money managers are committing to, you know, not investing in the fossil fuel industry. What you're actually seeing is a decapitalization of pre-existing wells that were drilled but not complete. And so the analogy we used in this piece was, you know, if you're going to, let's say, mine for gold, you have to open up a cut, you have to strip. What you're looking at in this chart is, since COVID, the industry is no longer opening up new cuts. They're just mining cuts that are already opened. And in this case, they are completing wells that have already been drilled. And the inventory of, they're called DUCs, drilled but uncompleted wells, has been shrinking at an alarming rate. And this is de facto, you know, by definition, it's not sustainable. So if you scroll back up to the U.S. Production chart, now the U.S. is not the world, but it's an important player in the world. It's one of the largest oil producers in the world, might be still the largest oil and gas producer for sure. Even maintaining this declined level of production post-COVID is going to be more and more challenging, because it's very clear, you can just do the math, the industry is not spending the capital for a variety of reasons, not just anti-fossil fuel movement, but also they destroyed a lot of investor capital before COVID. And some of this is sort of rationalizing that out. But you know, if you combine what's going on here, which is sort of an artificial production sort of mirage, with the energy policy in Europe, which has caused this huge spike in the price of natural gas internationally, it really is a pretty scary time. Of course, you know, it's called Doomberg for a reason. We tend to be, let's say, we tend to focus on the prepared side of things.
Right.
We have risk management, see what the potential doom is that might be coming. And energy is the big story. And so we've written dozens of pieces on the consequences of the energy shock. The most important one being that the price of fertilizer has skyrocketed 3, 4, 600%.
When does this hit? Like, how far off in the future is it? And it gets difficult to interpret a lot of these price signals and supply demand shock signals right now because of the COVID-oriented supply chain issues. It's hard to sort things out with COVID.
I think so. First of all, the U.S. is buffered by the fact that we have enormous amounts of natural gas, and the price of natural gas is still very reasonable here and is in fact making a huge advantage for our domestic manufacturing capability. Where you'll see it is in the spring planting and in food. And that is only months away, because even the U.S.'s abundant supply of natural gas does not insulate American farmers from the fertilizer costs, because fertilizer is a global market and the U.S. doesn't make much of it. Now, the few facilities we do have that are making fertilizer are enjoying robust profits because they get to sell at the global price. And we're already seeing demands from the Senate that fertilizer makers be investigated for gouging, when in reality, it's nothing more than a response to, bundled energy policy in Europe. So I think in early 2022, we are going to see, first in the poorer countries, but eventually finding its way to sort of the Western democracies, we're going to see massive price spikes in food. And history teaches us that 9 meals to crazy is the old expression from the prepper community. Once people can't afford to pay food, forget about the landscaper that can't afford to pay the gas to get to his or her clients. Yeah. When you can't feed your family, that's when it gets real. And I believe we're already beginning to see some of the consequences of that. So I think the story of 2022 will be a food inflation and food supply crisis story that is directly born from the energy crisis that we're seeing today.